Hi, it's Solomon with the Mortgage Hub. And if you're a 1099 employee or a self-employed borrower, you may have heard that getting qualified for a mortgage is going to be harder than if you were a W-2 employee. And I wanted to break that down in this video. So W-2 income is straightforward, right? The lender looks at your pay stubs and W-2s. If you make $100,000 a year, that's what they're going to qualify you on, $100,000. 1099 is going to be more complicated. So if you make $100,000, but then write off $60,000 for expenses, the lender is going to look at that as, hey, you make $40,000. The difference really is on W-2 is that you make what you make, right? Whatever your W-2 says you make from an underwriting perspective. On a 1099, it's really not what you make, but what you actually keep. So it's based on your net. As far as documentation difference, if you have if you're a W-2 wage earner, you're going to have W-2s, pay stubs, very basic. Typically, on a 1099 or self-employed borrower, they're going to look at tax returns, 1 or 2 years, depending on some specific guidelines. But one workaround that there is you can use either a 1099 program or a business bank statement program. So 1099 is just based off what your 1099 says you made in the previous year, and they're going to apply an expense factor. The bank statement programs are going to be similar, but it's based on deposits, and I go into that in detail in a separate video, which you can find a link to in the description. So really what the lenders focus on is stability, right? They feel like, the stability from a W-2 standpoint, wage earner perspective, there's more stability there, and there needs to be more evaluation when you look at if you're 1099 or self-employed. So that workaround though is a very good workaround, like the 1099 program or the business bank statement program. There are some differences there as far as you're going to be limited to 10% down versus on a conventional W-2 loan. You're going to be can go all the way up to 3% down or 5% down, depending if you're first-time home buyer or not. And you're going to have some restrictions as far as credit score. Typically on the 1099 program or bank statement program, you're going to need a higher credit score than a conventional loan. So you're going to have, and then there's also some restrictions or some additional requirements for your reserves. Reserves meaning how much money you have left after paying your down payment, closing costs, etc. So there are some specific details that you have to be aware of, but as far as if the question is can I qualify? Yes, there is definitely a better way to qualify to buy a home if you are a 1099 employee or a self-employed borrower versus using those programs versus using the traditional ways, which is the conventional loan. So bottom line, the W-2 is more looked at as a more straightforward approach. 1099 a little more nuanced there as far as documentation and some other layers that we have to take a look at. But if you want me to take a look, feel free to reach out. My number is 562-484-1907. We can go through the specifics of your scenario and see how we can help. Thank you.